Welcome back once
Mhm.
again to another episode of our podcast. My name is SeeWing Yee from the Yee Real Estate Network, and one of my esteemed members of my network is Julie. How are you, Julie?
Hi, SeeWing. How are you doing?
Fine, thank you. Yep. So again, Julie is her, her presentation is sort of she represents the several thousand free member within our network, our community of real estate investors. Mostly our investors been are in located in California, in other high cost
Mhm.
market, people who have a very busy professional jobs, working full time. They have very little time to invest. So for more than 20 something years, my network been around for that time, and we have helped hundreds and hundreds of real investors from high cost markets who are very busy. They want time freedom. So therefore, they buy out of state turnkey, mostly new construction cash flow properties from the various network that we vetted in different fast growth markets. So, so Julie, today we can talk about from a high level. So, why we love our buy box, our philosophy,
Mm.
right?
Mhm.
Our core value. So
Okay.
so so we can discuss like what type of investors that can benefit from using our turnkey services where everything is
Mhm.
one-stop shop where we done all the heavy lifting, we done all the
Right.
we vetted all the local markets, and we have a
Mhm.
great team of in each market, one-stop shop. Each market
Right.
we represent, they have a professional property management in place. We have lenders in place, title company, and the rehab team, housekeeping team. Everything's the one-stop shop where where our investors can confidently buy out of state, long distance, and not get bogged down
Mhm.
with time freedom, and so they can
Yeah,
free up their time to do the things that are important to them. So
absolutely.
so Julie, since you have a nice portfolio with
Mhm.
our network, so I want you to speak on behalf of our members, if you will. Uh,
Mhm.
so let me start off by saying again, I the benefit of buying through my network is busy people, they have no time to read, very little time that is, because they're
Mhm.
focused on a career, their family, working 40, 60 hours a week. They still want to invest in real estate, and they can't buy real estate in their local market, in their own backyard, because especially in California, it's too expensive.
Mhm.
They can't
Right.
they can't cash flow. The number does not make sense for all these
Mhm.
decades, not just now. So they have to so they buy through our network, and we have turnkey properties, new construction in the growth markets in all over Florida, all over Texas, Oklahoma,
Mhm.
Alabama, and Buffalo, Niagara Falls.
Mhm.
So the people that benefit from using our services is just that, again, I mean, we provide positive cash flows. If the professional property management, so they could do it, pretty much hands off, right? I mean, uh, he's very long term. They can do very well as long as they can focus. So again, so we've done if investors
Mhm.
do all the work themselves, it's very hard to find your own team, your own property management. How you gonna
Correct.
find the property in what neighborhood, in all those risks involved.
Mhm.
So that's why I created this network more than 20 something years ago, and
Right.
my network the Yee Real Estate Network has helped so many hundreds of people from mainly from California, but we have members from other part of the U.S. high cost markets area as well. So you've been part of my network for like 6 7 years.
Mhm.
So can you
Mhm.
kind of validate first and foremost, why do you see? I mean, no, look, there are
Mhm.
1,000 ways to invest in real estate, right? We know that.
Yes,
One,
absolutely.
maybe even more than 1,000. So if your buy box is such that your our investors love our buy box for the few
Mhm.
that we do it. We have several thousand members, but of course, not all of them invest, and most of them they don't invest for many reasons, uh,
Mm-hmm.
mainly fear. But can you briefly, on behalf of my network, Julie, can you explain to me from your perspective, in addition to what I just said, what are the value add, the benefit associating being a free member of our organization and be able to tap into the resources and
Mm-hmm.
policies that we have in place for our investors? Can you share with us?
Oh, sure. Yeah. I mean, when we first started, my husband and I first started, or decided rather, we wanted to invest, we had no idea even that you could even invest out of state without actually being in the state. We live in Southern California. Things are, most people know, are very expensive in Southern California. Most of the money that we had, which wasn't a lot, was tied up in retirement. And just even that's like a whole nother subject, but just even understanding that you can actually invest in real estate in a retirement account was like revelation for us. So we thought, okay, there's hope here. But then I think one of the benefits, or one of the biggest benefits of being part of your network is you have already vetted all these different areas. Like, I mean, I personally have been to very few states in my life, which is hard to believe. But you had properties in New York, upstate New York, which is where we ended up investing. You have properties in Texas, Florida, Oklahoma, all these different places around the country, which are not nearly as expensive as Southern California. And it presented a good opportunity for us to actually start investing, although we kind of started investing late. We were able to start investing and actually have some income coming in. Now, our big buy box, you talked about that earlier, was we needed additional income to supplement our retirement. I am already retired. My husband is still working. He's a few years away from retirement. So, in addition to, our 401ks and whatnot, we needed some additional income. And so this presented a good opportunity. We would have never known about upstate New York, other than, I think football teams are up there or whatever, Buffalo,
Right, right.
other than that, we would have not have realized that there was such an opportunity up there for us. Now that's not everybody's buy box, but that was the one that seemed to work for us. And the goal for us was to hold on to it like really forever, and a few of them, a couple of them we paid cash for, some of them we financed, and even just understanding how to do that was a huge advantage in being part of your network. So I think there's a lot of advantages, especially if you're not skilled. Well, if you're already skilled in real estate, they don't really need you. But for people like us who had very little knowledge of investing, had never invested before, actually had never even bought a home before, it was a perfect trifecta for us, to set up to get to know you and understand about turnkey. And, you may want to even explain a little bit more about turnkey so that they understand how seamless that can be, how that can be. But yeah, but that just really worked for us. I don't know if that answered your question, but
Yeah, you have. So Julie, what I hear you saying is that busy professionals like you and your husband, you just have not enough time to research on your own, especially
absolutely.
buying in a cash flow market out of state, 1,000 miles away. It's just very hard to do yourself. And
Hmm.
furthermore, self-managing properties also is very difficult, very
Hmm.
stressful. So might as
Right.
well, earn some passive income and having your portfolio property grow over time, your rental income
Absolutely.
increase, you get tax benefit. And ultimately, in the next 5, 10 years, depending on someone's goals, you can retire, not necessarily replace your W-2 income,
Right. 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 Right.
have more wealth, more passive income to even enhance your retirement lifestyle. So
Absolutely.
yeah, and do it without, again, without needing a second job, without
There
just
you go.
go through the stress of
Abs-
tenants and toilets and all those kind of,
Yes. Right. 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 Yes.
yeah.
And that is the best part about the whole turnkey system is it's very hands off. You were able to provide us with the contacts, the turnkey providers. You were also able to refer lenders to us, different people that can help us walk through how to run it through the escrow and whatnot. So, I mean, we had to do our homework, to see what worked best for us. but really by being part of your network, the information was just kind of laid out for us and kind of like a turnkey buffet. And we just had to kind of pick and choose what worked for us.
Yeah,
And we have not been sorry. The turnkey provider, Buffalo Turnkey, we've been working with them since we started back in 2001 or 2021. Oh my God, 2001, 2021.
right.
And they have been extremely helpful. They have their property manager that is connected with the company, and we literally do nothing. We don't really have to make any decisions. Rarely do they have to call us to make a decision about
Yep.
anything, which is what I like. I don't want to think about it. I don't want to take care of, oh, we got to put a smoke detector in. Should we do that? No, they do that. They just do that. They don't have to call us and let us know that they're going to
Yeah.
do that. So
Yeah. It-
it works.
yeah, it's very, what I hear saying is that it's very reassuring to trust your team on the ground
Absolutely.
because our team in all these markets we mentioned that they come highly recommended and they've been doing for a long, long time. They do a great
Yes,
job for out-of-state investors. They are very,
absolutely.
very, very, very transparent, very helpful.
Hmm.
They will help you grow your portfolio. I mean, 3, 4, 5 years later, the property management and those local team, those area where you purchase, they will continue to provide good service long term,
Absolutely.
not just one-time transaction. So yeah, turnkey means, yeah, again, new construction, everything's done for you, warranties are available. We have already vetted the market. We understand the rental market. We understand you with 20 to 25% down payment, you will achieve positive cash flow. And
Absolutely.
over time, the tenant's going to pay down. Real estate income property is a multi-dimensional asset class. It's one of
Yes.
the world's greatest, most proven asset class in the world, and because
Hmm.
of the tax benefit, your ability to leverage, you put a small down payment and you get the whole value of the asset when you purchase it. You get the tax benefit. You get the increasing of the rental
Yes.
income, increasing cash flow. Your tenant's gonna pay down your debt for you. Amazing,
Hmm.
right? Your tenant's gonna
Absolutely.
your tenant's gonna make you rich, and you get appreciation. You could then you over time your tenant can pay down your loan, so you have more equity. You have a
Yes.
and then when you retire, you retire 5, 10, 15 years later, whatever your goals and timelines.
Hmm.
Your real estate portfolio can potentially replace your W-2 income or
Absolutely.
fully or partially. So you could, so you would, when you retire, whatever your definition of retirement is,
Yes.
you will never run out of money. You will have equity of
Absolutely.
you have equity of your real estate portfolio and the passive income to maintain your retirement lifestyle. So you have time freedom
Yes.
to do the things that are important to you and your family. Myself, I've been traveling full time while running my
Hmm.
real estate network all over the country, all over the world, really, for the past 20 something
Hmm.
years. So that's my definition of retirement. Everybody have different definition. So with that
Yes.
said, so you would so Julie, at the same time, a lot of people out there, whether they are rookie investors, they are part of my network, and some of our investors have bought 1 or 2 rental property in the past. What I've seen lately is just that, not lately means last few years, I
Hmm.
see a lot of people stay still or sitting on the sideline still.
Mm.
They're absolutely paralyzed by fear because of all the negativity, all the doom and gloom
Hmm.
emotion coming from social media, YouTube videos, and mass hysteria. So furthermore, uh, uh, furthermore, there are more people sitting on the sidelines than ever before. Now,
Hmm.
not everybody can benefit from our network, the core philosophy that we provide. So
Sure.
in your mind, a whole bunch of investors have not taken action, not only do my
Mm.
network, but all the
Just,
potential risk investors all across the country for the past few years, they are not taking action. So what type of investors does not benefit from using the type of services that I provide? And then my first question to you, and my second
mhm.
question is why realistic will continue to do well. I know there's some slight downturn
Sure.
some economic uncertainty here and there. But if you invest for the
Hmm.
long term, if you buy your property for cash flow, who care about the volatility of the market? You invest for
Sure.
long term, as long as you get cash flow, you just sit tight and just overcome the short term volatility
Hmm.
of the economy or whatever, and then invest for long term in any 10-year period over time in the past history.
Right.
If you
Right.
invest for the long term, you will do well. You will make money. Your realistic value will increase. So two questions. What
Hmm.
kind of people who does not have our kind of the kind of buy box that can benefit from using a service?
Right. Right. Right.
And second question is,
Well, I think there's a few. I think there are people that really feel like they need to be hands-on. My uncle is like that. He likes to be very hands-on and wants to do everything himself. And a lot of people get a lot of value out of doing it that way. And that's great. If that works for you and you want, a second full-time job or whatever. Well, in this case, he's retired, so it works for him. But something like that. Or there's different business models. Some people are like that quick Airbnb, or they think it's quick money Airbnb mentality, and that's fine. I think anything can work, but I think the most important thing is you have to know what your goal is. Like you said, what's your buy box? And if it's not long term, like some people want a quick turnover or whatever, and that I guess you can still do that kind of business depending on where you are and how skilled you are at it. But yeah, that particular client is not a turnkey client. Turnkey client is somebody that wants more hands off. You want the same results, but you just want more hands off. And I mean, literally, like since we bought the properties, and we bought 6 properties relatively quickly, we have not had to do anything with those properties. I mean, every once in a while they'll call, and if a repair is required that's above a certain amount, they'll call us and say, okay, this is what we need to do. Are you okay with it? And we're like, of course. They usually take it out of the rent. And again, there's nothing coming out of our pocket. And I think something else that you mentioned that's just really important. People understand if you're financing it, it's the tenant that's paying down the loan.
mhm.
That was like revelation for me. It's like, oh, I don't have all this money coming out of my pocket. No, the tenant is paying it. So you're benefiting by having this rental property. You're getting, all of our properties have some cash flow, which is great. And all of our properties in the last 4 to 5 years have increased in value, number one, market value, and they've also increased on the rental income. So now we're getting more income, than we were before, and when we first bought the properties, we had some cash flow coming in. So it's for someone like us, it's a win-win-win. Now, if you choose to be more hands-on or whatever, this is probably not going to work for you. That this particular model is not going to work for you.
Well, Julie, I think with the artificial intelligence, with the internet,
Mhm.
with the YouTube video, just exploding. So
Mhm.
people have access to a lot of different
A
investment
lot,
strategies.
a lot.
And what I see, Julie, from my perspective, I think it's just that people's buy box are not in alignment with their core value.
Oh, yeah, I
Meaning,
agree with that.
they are mesmerized by this short-term, like a short-term kind of deal, the
Right.
excitement of
Make a lot of money fast.
yeah, make a lot of money fast, and they got mesmerized by this marketing scheme promoted by those
Hmm.
fake real estate gurus everywhere, right? I
Right,
mean,
true.
we're talking, fix and flip, or how cool it is. You can make tons of money. You can do syndication. You can do partnerships. You can do a real estate investment trust. You can do the burst strategy. You
Hmm.
buy the property at 30% discount. Then you fix it up. Then you refinance, and then you
Hmm.
repeat the process. I mean,
Correct.
the burst strategy, BRRR, has been very,
Correct.
very famous, and it's
Hmm.
promoted by a lot of this unethical real estate gurus out there,
Yeah.
and just they just promise a quick get rich quick scheme, and
Right.
people are they are emotional,
Hmm.
triggered by this, and they take action. And oftentimes they
It doesn't work.
it doesn't work. They crash and burn. So
Yeah, it
it,
doesn't work. Yeah. And
one
I think that that's important. I know we had talked about that on a previous video where you have to understand why you even want to invest.
Mhm.
Why do you want to buy? Even if you did a fix and flip and you made $20,000, okay, what do you do with that money? I mean, people just they hear these like I think you use the term shiny new object,
Yeah.
these shiny new object things, but they really don't even know, okay, if I did it and it worked, what do I do now? I mean, what's your long-term goal with that? Are you gonna buy another one? I mean, I think people are just because there's like you said, so much information out there on the internet and everything sounds good. Everything sounds good, but you really got to be able to do your due diligence, know what your buy box is, commit to that, and not be swayed by all the shiny new things that are out there. Because there's always something out there that's going to sound like way better than what you're doing.
Yeah.
Yeah.
I know. So again, the frustration I have is that not only those newbie investors that we have, they are completely paralyzed by fear. They are just absolutely not doing
Yeah.
anything. So they just, you know how all those 1 million excuses. Oh, I want to wait
Hmm.
until the interest rate gets better. I want to wait until the Iran war is over. I want to wait until the
Right.
inflation dies down. All kind of
Yeah.
1 trillion excuses. Those
Hmm.
people want to wait for the perfect time,
Hmm.
more than likely they would never do it.
Right.
It's,
Yeah. Because they're afraid. They're
yeah,
afraid. And I think that, you've quoted that uh, Warren Buffett saying often like be greedy when people are fearful and be
right.
fearful when people are greedy. Yeah. When everybody's buying, it's like that's the worst time to buy because then, it's driving up the interest rates, driving up the pricing, driving up everything.
Mhm.
But when people are fearful, that's when you take advantage of the opportunities. Yeah.
I'm going to spend the next 10 minutes remaining to go through. I'm going to go through the pro forma using Property Tracker, Julie.
Hmm.
So my intent of showing this pro forma is that there's never a wrong time to buy,
Right.
regardless of the economy. Of course, you have to do
Hmm.
research. You have to go through the fundamentals. You need to buy in
Hmm.
a market that have a population growth, job growth, migration growth. The
Yes.
fundamental has to be right. You have to have cash flow at 20 to 25% down payment. I'm going to run the numbers. A lot of people, you use Property Tracker
Yes.
software, and I use it. I use it almost daily. I've been doing it for
Hmm. Hmm.
15 years. I'm going to show you even the worst case scenario when you own the property in the network that we're promoting. Even under the worst case scenario, you still can have a double-digit return.
Right. 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 Yes. I believe that. Hmm.
A lot of people think, oh, if I buy wrong time right now, what if the housing market crash? Then my house is gonna crash along with it. No, that's not
Right.
the way it works. But you gotta know the numbers. You have to know how to do the research. So without further ado, let me share this, okay?
Okay.
I'm gonna use this example of this co-living property. This a normal $320,000 single family home, okay? With,
Hmm. Hmm.
with 20 to 25% down payment. Okay, this is not a traditional long-term rental. This is a co-living property, which I've been promoting for a while now, as you know, Julie, right? So
Right. Right. Right.
I'm going to use this example, okay,
Hmm.
to go over my purpose. So this is what we call a pro forma. So this
Hmm.
property, 7 bedroom, 7 bath, co-living rent by the room
Mm,
model, which
mhm,
which
mhm,
been which has been amazing. Okay, I love this new model that we are entering within our network for our investors and others alike. So this property you buy for 325K, you put 25% down payment, which is out of pocket 81,000. You pay closing
mhm.
costs and the whole 9 yards. I know not many people have $100,000 to finance this particular property, but many people
Mhm.
do. Okay, and
Yes.
so this is the metric. So you get a interest rate of 7.3% 30-year fix on a DSCR debt service coverage ratio. This is the only loan that
Mhm.
do co-living properties. Even at 7.3%, but you're collecting $7,000 rent, one thousand
Nice.
dollar rent per month per tenant. Okay, we do the vacancy factor. So you collect $7,000 monthly rent and $84,000 of annual gross rent. It is
I
mind-boggling,
love
isn't
that.
it? So these seven tenants, if they consistently stay rented, will pay down
Hmm.
your mortgage. You're going to pay down the mortgage that you're over time in the next 10, 15 years, going to
Right.
drastically pay down the mortgage you've used to finance this particular property. Then the usual
Hmm.
property taxes, insurance, you paying past split, 8% of your gross rent, which is around
Right.
600 $500. Then you pay a co-living property management fee, another 8% per month, for a total of
Hmm.
$1,030 per month, right? Then you pay
Right.
the maintenance costs, with the turnover of those tenants, around
Hmm.
350 per month. Then
Hmm.
you as a landlord have to pay utility, the internet hookup, the garbage collection,
Right.
the electricity, the water, everything else. You come out of pocket. All right.
Right.
So that's your operating. Then there's your net operating income. Then you minus your mortgage,
Hmm.
1671, 7.3% mortgage. Then at the end of the day, these numbers is very realistic because we already have investors
Hmm.
that purchased last year this kind of
Right.
co-living model, and this is the number that they derive from. So this is a pretty much as close to as real number as possible. Of course,
Yes.
but then again, this is just a projection. Then you minus your operating expenses, and then your debt service, which is your monthly mortgage,
Hmm.
right here, 1671, and you still net cash flow minimum $1,800
Wow. That's
net
awesome.
net
That is
monthly,
amazing.
and
Hmm.
annual cash flow is $22,000 annual cash flow. It's just then a lot of people don't know. Look, running these numbers using this kind of property tracker software will make
Hmm. Hmm.
anyone a good investor because you have to run
Right.
the numbers. This is not rocket science, by the way, Julie.
Right.
I found
Right.
out not only rookies, but many of the so-called experienced investors, the people who bought
Hmm.
one or two rental property, a couple of rental property over the past few years, they
Right.
they do not, I repeat, they do not how to run the numbers. They don't
Hmm.
know.
Interesting.
They
Interesting.
are uninformed. They don't use this. This kind of software is available everywhere. Technology, artificial intelligence allow you use so many of these kind of resources. I mean,
Right.
it's just pretty shocking. Okay, with today's world, there's so much the tools and resources available to you. So anyway, your monthly cash
Hmm.
flow. We even incorporate very very conservative. Uh, we use an 8% vacancy rate, which is very realistic.
Hmm.
We use
Right.
we use a maintenance percentage of 5%. All these are
Hmm.
real. Look at the maintenance, $700 maintenance. We incorporate. I mean, no utilities, $700 monthly
Utilities. Uh-huh.
utilities, and then another $350 monthly
Right.
on the maintenance. So this is very
Hmm.
realistic. And
Hmm.
I'm going to start off by using a 0% appreciation. Some people thinking, oh, what if my property lose value for 5 or 10% in this year, whatever. You know what?
Right.
If your property lose value for 5 or 10%, it's on paper. It's it,
Right.
just because some news media said, oh, your property in your neighborhood have actually lost 10% value. Does that mean
Hmm.
does that mean you have to sell your property?
No.
No, because
No. Yeah. You haven't
you
lost anything unless you sell it.
right. You
Exactly.
investing for the long term. All you care, you stay the course and look at your return. Even
Hmm.
I projected this property have no value gain for this current year. You see my projection assumption,
Right. Right.
projected
Right. Right.
appreciation rate is zero, right?
Hmm.
But as long as you're collecting rent, as long as you're collecting the cash flow and you're getting the tax benefit and you're getting the principal pay down, but on your loan, and you get an inflation-induced debt destruction, right?
Hmm.
All these numbers is an economic benefit. So at the end of the day, you have a rent to value ratio of 2.15%. 1% is off the chart, but this is a much greater than traditional rental.
Right. Right.
But
Hmm.
you a cap rate, some people don't understand what I mean, but I don't have time to explain it. 13%. Usual capitalization rate is like 4%. That's the benchmark, right?
Right, 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 right.
This co-living property is a whopping 13%. Cash on
Wow.
cash return. Cash on cash return means your annual net cash flow, which is right here, right? What
Mm-hmm.
your monthly net cash flow is 1,839.
1,800. Wow.
Your annual net cash flow was 22,062.
Mm-hmm.
22,062 divided by your down payment, which is 103,000,
Right.
equals 21% cash on cash return. Okay.
Got it. Mm-hmm. Mm-hmm.
That means the first year, one-fifth of your down payment has been paid off by cash, by the cash and cash return. In about, do the math, in about 4 more years, right?
Right.
In about four
Right.
more years, if the cash on cash return stay at 21%, in about 5 years or less, all your entire down payment you put in to buy this property, it's been paid back to you.
Right. Exactly. Mm-hmm.
That's the
That's
critical.
incredible. That
That's
is
how
incredible.
Yeah, that's how you calculate cap rate, which we even have this software have a definition of how to do
Mm-hmm.
the formula for the cap rate. I mean, this is great software.
Right.
By the way, this property tracker software is free of charge. So please, for those of you out there, please try this out. Yeah, you can do a monthly
Yes.
subscription. I'll pay, $35 for a monthly subscription because you and I, Julie, we manage our portfolio
Yeah.
using this property
Absolutely.
tracker,
Yes.
and there's a small fee for that if you want to go that route. But
Mm-hmm.
anyway, but anyway, so how could a 0% appreciation property, this projection,
Right.
you're still getting a 24% return on investment at 32%
Yes.
if you add on the debt inflation in you add on the what's this term most people don't understand, inflation induced debt destruction.
Mm-hmm. Mm-hmm.
I created a training video to elaborate on this, but we're not going to talk
Oh,
about
okay.
this. 24
Right.
to 32% total ROI. You know how again, your tax benefit, your principal pay down, and your net cash flow divided by your down payment
Mm-hmm.
equal 24 to 2%, even when there's no appreciation projection. So now let me make some changes. Let me put down like let's say let's put in 4% appreciation year over year, even 5%. That's
Okay. Okay.
it's a historical rate, right? Historical rate like 5% appreciation. So let's
Okay.
5%. Then annual appreciation, which is pretty normal. Then they're not going to do a 1 year projection. Then
Mm-hmm.
your ROI increase to
40%. Wow.
39 to 48%, right?
Right. Right.
Just like that.
That's incredible.
Yeah, that's incredible. So you need to evaluate your investments on an annual basis based on a multiple dimension aspects, right?
Right.
So
Right. 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 Mm-hmm.
let me say, okay, we have another loan program. This is a 7.3% loan program on this co-living property. We have another
Mm-hmm.
builder that offer a rate buy down, which is kind of amazing.
Mm-hmm.
We have
Mm-hmm.
two builders that I'm promoting on a co-living property on a new construction, right?
Okay.
So
Okay.
the other builder, they're promoting a rate buy down of 5.5% on the DSCR loan, 5.5% 30
Mm.
fixed instead of
Mm-hmm.
7.3.
Mm-hmm.
Okay, by decreasing the rate from 7.3 to 5.5, almost 2 percentage point decrease. So
Correct.
before you have a monthly net cash flow of 1839, right? So
Right. Correct.
let me submit this amazing mortgage rate buy down that
Mm-hmm.
if you buy this co-living property from my other builder and look at the monthly
Mm-hmm.
cash flow changes from 1839 to 2120.
Oh, wow. That's a big difference.
We're talking
Wow.
another $300 to $400 increase in monthly cash flow by
Mm-hmm.
taking advantage of this amazing rate buy down from 7.3 to 5.5%
Correct.
into 2126. All right. So,
Wow.
uh, any other worst case scenario you want me to address? In fact, okay, let's pretend there are two of the rooms are or vacant,
Not occupied. Okay.
not occupied. Two of the seven
Okay.
buildings not occupied. So instead of collecting 7,000 on fully occupied property on all seven,
Right.
uh, rent by the room model, let's use 5,000. Two of the rooms are not occupied. By the way, based on prior projection, we have a
Hmm.
90 to 95% occupancy rate. We have a
Right.
less than 1% evictions rate. And
Nice.
the typical tenants that stay with our new construction co-living properties are 6 to 9 months average length of stay.
Okay.
And
Okay.
since our vacancy is only like 5 to 7%, each time
Hmm.
a member tenant vacate their room and they leave, it takes
Right.
it
Hmm.
take our co-living property manager like 1 to 3 weeks to rent that room.
Wow.
It's that
Oh,
quick.
wow. That's
Furthermore,
great.
do you know what the changeover cost, the rehab cost to
No.
$100 to $150?
Oh my goodness. That's like hardly anything.
Yeah, for our co-living
I
housekeeping
love
team
that.
to clean it
Hmm.
out and pass split will rent it pretty quickly because our model,
Sure.
99% of other co-living properties are not 1 bedroom to 1 bathroom ratio. And
Right. Yes. Yes.
across the country,
Right. Which makes this property so appealing. Yeah, because it's 1 to 1.
yeah, most of the co-living properties that are promoted across the country by Pass Split, our marketing tech platform, they are older property. They are not 1 bedroom to 1 bathroom
Right.
ratio. They are converted from a renovated, and they have a typical like 10 bedroom to 3 bath ratio. That
Hmm.
means what? Three or four, five tenants sharing the same bathroom.
Right. That will not work. Yeah. Hmm.
So our rent by the room model, new construction,
Hmm.
1 bedroom to 1 bath ratio,
Right.
allow our tenants to have a much better experience.
Oh, yeah. Much better. Hmm.
They stay a lot longer. Okay, they're happy
Right. Makes sense.
with their stay, and they pay like 30% more in rent than a competing renovated older home with a shared bathroom scenario.
Sure. 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 I'm just curious, like what type of client becomes a member with the whole co-living model? Like what type of tenant are
Yeah,
you marketing to?
Yeah, mostly workforce tenant, but the working poor,
Okay.
the people making
Okay.
20, 30, $40 per hour. They're making, $3,000 to $4,000 per month. And there's a whole
Sure.
bunch of the people across the country,
Absolutely.
cannot even afford to pay a studio apartment, a 1 bedroom
Hmm.
apartment for like $1,500. So
Right.
instead they come to us, they pay 1 bedroom, one private bathroom for like
Hmm.
$1,000 per month. Everything
Right.
everything
And
included.
everything is taken care of. Yeah.
Yeah,
All you're doing is buying your groceries, basically.
that's right.
Yeah.
We pay for the internet, we pay for the utilities, the water, electric, and the garbage pickup. The landlord host pays all that. So
Right. Right.
those tenants, they reduce their housing costs by 50%. They love
Hmm.
our clean rooms, safe rooms. Everybody get along and everything else, and
Hmm.
yeah, and many of them they stay 1, 2, or 3 years at a time.
Hmm. I just had a real quick question. What about internet? Does the owner provide the internet or do they each get their own internet?
O-
How does that work?
Owners, hosts provide all the
Owner
internet.
does the internet. Okay. All right.
Yeah,
Yeah, that's a sweet deal. I mean, for a tenant, that's a really sweet deal. They can just really walk in and, like I said, bring the groceries and their toothbrush.
yeah. Pass Split does all the tenant screening, background check, the whole nine
Y'all
yards.
love that.
They have amazing multi-million-dollar marketing platform.
Hmm.
There are almost like 35 to 40,000 co-living rental properties spread across 50 housing markets in
Hmm.
the country. This
Right.
asset class, you know, is
Hmm.
growing by leaps and bounds.
Right.
But
Yeah.
It's amazing. It's
It
this is
is amazing. That's a great opportunity for someone that's ready to move into something. I mean, to purchase something like that. Great enhancement to an already existing portfolio.
okay. I just painted a worst case scenario, right? I mean,
Right.
two rooms are vacant, which is rarely happens. And let's
Hmm.
look at the
Hmm.
even with two rooms vacant out of the seven rooms,
Right.
that the investor still cash flow. Look at here, still cash flow
Still
$680.
cash flowing. Yeah. Yeah. That's awesome.
I mean, this is
That's a
amazing.
that you can't really miss on something like this. Yeah, you can come up with the down payment, which I think a lot of people can. A lot of people can do that.
Oh yeah, a lot of people, a lot of my investors in locating Bay Area, they have the money. They have the money for the down
Yes.
payment.
Oh, absolutely.
And yet, even with the vacancy, even with the no appreciation, the return are still kind of similar. You know,
Hmm. That's
nothing has
interesting.
changed.
Yeah.
So,
Yeah.
so would you argue that this kind of co-living property is a recession proof, right? I say,
Absolutely. It's a win-win. I mean, for anybody that's looking to, like I said, get into investing for the first time or definitely somebody that's already experienced in it, it makes a lot of sense.
yeah, yeah. I have given you all kind of projections
Right.
about on everything. The worst case scenario. So under any economic conditions, look,
Hmm.
the tenant that we're getting, the workforce tenants, you know, there are plenty. There are many more. The demand is so great in every market in the
Right.
country. But you
Right.
have to. We're gonna get into that. But our
Yeah.
markets that we are creating this new construction model, grounds
Hmm.
up, one-on-one. It's just iconic. We have Jacksonville, Florida. We have
Hmm.
Tampa, Florida. We have Orlando, Florida. We're coming up in Ocala in Central Florida. Our
Okay.
builder are building up this new construction,
Nice.
grounds up, one bedroom, one bath ratio. We have duplex and fourplex coming up in the next few months as well. And we're doing the Texas now, Houston right now, amazing co-living market in construction, very high return. So this is just a tip of the iceberg. So for anybody to say, look, this is just one example. The scenario, the numbers I just created on a pro forma, is real because under the worst case scenario, two rooms vacancy, you still cash flow in this situation.
Hmm.
Then
Right.
if your appreciation is zero temporarily, could be, right? I mean, right now the housing market is pretty much stuck at the neutral layer, which is fine. But
Right.
but so my message is this, Julie, and you and I know that there's
Hmm.
never a wrong time to buy.
I agree with that 100%. I agree with that. You just need to make the decision to pull the trigger and just get in.
I just created the worst case scenario. I just created
Right.
a two rooms vacancy out of seven rooms. You still get high cash and cash return. You still get similar cap rate. You still get total ROI of about 25 to the 35%. And then I create a 0% appreciation. You know,
Hmm.
the metrics, the numerical metrics is not that much different.
Right.
Like,
Right.
one more thing. Oh, some people, okay, one more thing. I know, I'm talking a little bit too long. Uh, some investors have this useless, mind-boggling skills. I'm waiting for the mortgage rate to come down to 5 or 4%.
Mm, mm.
On the investment property, three, four, $500. The difference between 7% interest rate and 4% interest rate, yeah, it's
Right.
only a few $100.
Hmm. And I
That's
don't
not,
think people realize that it's not
yeah,
that big of a deal.
it's not gonna make or break you. You
And then you can always buy down I mean, refinance the
yeah.
rate later, but at least you have the advantage of having the property with all the tax benefits and all the other things we've talked about that are below the iceberg, or below the surface, and you're still winning, and then if the interest rates drop significantly, you can always refinance it.
Okay, here's my recap. We can go on all day long, but
All right.
we've been going on too long. Now, this is a normal metrics, right? The normal metrics. Okay,
Mm-hmm.
this is realistic metrics. 13%
Mm-hmm.
cap rate, 25% cash on cash return. or
Hmm.
first year return on your investment total, your appreciation
Hmm.
rate, your rate buy down, your loan buy down, your cash flow increases, 3 to 5% per year. Annually, you
Hmm.
get 44 to 52% total return on your investment. No other asset class ever come close. So,
Right.
okay, here's the recap. For those people who have the money, and a lot of people don't have the money for the down payment. Okay, we get that, right? Not everybody has
Hmm.
hundred thousand
Right. Right.
dollars laying around to invest in rental
Exactly.
property, right? We get it.
Hmm. Hmm.
But at the same time, there are a lot of people that I know within my network of investors and outside the network, people across the country, people have money, right?
Right.
Just
Right.
don't,
Right. Right.
they are not educated and they're not informed. They don't think about real estate investing. They just are
Right.
fearful, whatever 1 billion excuses people have.
Right.
So the cost, given the numbers I just shared with you, even in the worst case scenario, people will continue to stay on the sidelines because of whatever analysis,
Hmm.
paralysis, numerically speaking, giving the numerical formulas. What is the cost of living each day they sit on the sidelines, not be able to benefit from all the metrics we just discussed? You tell me, what's the cost of waiting?
Oh my God. You know what? It's so, I don't think people realize it. Even just like I said, we've only owned our properties for like five years. Had we waited another 5 years, we would have just missed it. It would just, I mean, it's that much longer to get to your goal. You're missing opportunity with the properties. Like I said, we have people almost every week contact us, realtors, with, oh, your property is worth this much. Would you like to sell it? So, just in short 5 years, they've doubled, or not all of them doubled. Some of them doubled in value. And I mean, then all the tax benefits you miss out, which we've taken advantage of those, the write-offs, I mean, just everything. It's costly. I don't think people realize how costly it is. It's just time and money, it's costing you.
Yeah, you cannot take back the time that you miss, right?
That's right.
If you stay invested, if you buy real estate and wait instead of wait to buy real estate,
Right.
if you do it for 10 years, that's it.
Mm-hmm.
If you are disciplined and committed for at least 10 years of buying
Yep.
home on your real estate portfolio, the wealth you can create, the financial peace and security you can obtain for yourself and your family and
Right.
generationally, which
Right.
which is priceless.
Mm-hmm. And then, like I said, the value of the property, like this one property that we bought, and it was only like 43,000 or something, which I know is hard to believe. That's not a down payment on a lot of houses. But we just got some information from Redfin or whatever. They sent over the realtor sent over the Redfin thing saying the property is now worth like 75 to 80,000.
And that's in Buffalo, Niagara Falls, New
5 years.
York. And
Buffalo Niagara Falls.
there's only one of your rental property you purchased only 5 years ago. You
Right.
you purchased a total of what, 5 or 6 properties already?
We did
If
six, yes.
I taken action only five
Hmm.
years ago,
Yeah.
overcome fear and take action, you have achieved
Yes.
appreciation, your rent has
Absolutely.
increased, you have a lot of tax benefit, flow into
Hmm.
you. You have your tenants
Hmm.
paying down your debt for you. Real estate income property is a multi-dimensional
Absolutely.
class. So
Hmm.
people, no more excuses. Look, people have all this kind of a
Hmm. Excuse me.
unfounded fear. Oh, the fear of a housing crash, the fear of inflation keep on, the fear of an Iran war, the fear of
Hmm.
a tariff, of political
Hmm.
instability.
Political
All
party,
those,
right? Yes,
all,
everything.
all those are unfounded fear, which you as an individual investors have no control. What
Exactly.
what you can control is take action, do your research and due diligence, and have the 5 or more dimensions of real estate investing uh,
Hmm.
in your favor. So
Right.
invest over time on a daily, weekly, monthly, annual basis. Don't let those economic uncertainty, all those doom and gloom, housing crash, whatever, into your brain. You have to have a positive mindset.
Right.
Stay
Hmm.
the course. Don't panic.
Yep.
The first 5 year of investing sucks. right?
Right.
Sucks
Yeah.
because you have to overcome this emotional
The
roller
emotions.
coaster.
Yes.
Emotion.
Right.
The first 5 years sucks because we can overcome. A lot of people they cannot overcome.
Right. That's
But look,
true. Yeah. You're
you
right.
know, 1% of the U.S. population of the risk investors they take action. Of those
Right.
1% in the next few years, more than half of those people who bought one or more rental property, they quit.
Right.
It done because
Right.
they they they, they cannot handle the vacancy. They cannot handle the upkeep. They, they,
Right.
they give up and they will forever regret it. Woulda, should have, could have. The other is
Yeah.
a percentage. They're gonna invest over time.
Yeah.
Time is your best asset. Time is your friend.
Absolutely. 100%.
Is your friend.
Hmm.
Long-term investing is your friend, and this is history. If you do not study real estate history, you're doomed to fail. You're doomed to failure because in the past 100 years, I know I'm talking forever. In the past 100 years, there don't been one downturn real estate wise and economic wise. That's a 2008 housing crash. That's it. In the
Right.
past 100 years.
Hmm.
Okay?
Hmm.
And the
Hmm.
chances of happening, given today's economic metrics and data of a housing crash, is slim to none. But no one can
Right.
predict the future. All you can predict is your goals, your commitment, your long-term investing. Come hell and high water, you stay the course and just get the cash flow. Just get the
Absolutely.
cash flow. Who cares about, on paper, someone said your house lost value. I'm not
Right. 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 Right.
selling.
Exactly. Yeah. You're not selling. Yeah. So it doesn't matter if it's gone up or down.
All
Right. I agree with that 100%. So
right, okay.
people need to get off the sidelines, get over your fear, figure out what your buy box is, and just pull the trigger.
Absolutely. Okay. As I conclude, please like and subscribe to the YouTube channel. And for those of you who have not already done so, please put your email into my newsletter database on my website below so you can become a free member of our real estate organization, the Yee Real Estate Network, and learn, get educated, and ultimately, sooner than later, take action so you can achieve the wealth you deserve for you and your
There
family
you go.
for generations to come. Thank you, Julie, for
Thank you.
co-hosting.
Thank you, SeeWing.
All right. Bye-bye, everyone.
Bye bye.